What's going on, you guys? My name is Zach Hartley, and in this video I'm going to walk you through everything you need to know about how to buy an index fund. Let's jump right in. Okay, so index funds are very simple. They're just a basket of securities that copy an index. They copy the holdings and the performance and the results of whatever index that they are benchmarked against. Now, an index, just for classification, is a theoretical group of companies like the S&P 500 or like the Dow Jones. They're a theoretical list and group of companies that we track in points. You cannot invest directly into the S&P 500, but you can invest into an index fund or an ETF that track the S&P 500. Now, the one thing that makes an index fund unique from an ETF is that they can only be traded once per day at 4 p.m. Eastern time, so you cannot buy and sell them like a stock. That is what makes index funds and ETFs slightly different. In this video though, I'm going to walk you through how to buy both index funds and ETFs at the end. Now, why do people like to buy index funds and ETFs? Well, the reason that most people do it is for instant diversification. They can make one transaction and it gets them into a variety of different companies or different securities without having to manage it and without having to pay the commissions and the fees to make all of those transactions. They also happen to give very steady long-term returns depending on what you are investing in, and usually they also have very low management fees compared to mutual funds. Mutual funds are probably going to be the most expensive, and then index funds, and then ETFs, but mutual funds are significantly more expensive than index funds and ETFs. Now, when it comes to choosing an index fund, there are a variety of different options, but I'm just going to show you two that I am familiar with. This is the Vanguard 500 Index Fund from Vanguard, and it's really unique. It basically tracks the S&P 500, but it does have a minimum investment of $3,000 and an expense ratio of 0.04. Now, to buy it and to actually get invested into this specific index fund, you just go to the Vanguard website, you find it here on the webpage, you click on buy, and you're going to have to open an account with Vanguard. That is going to allow you to invest your money and get in or out of that index fund. Very, very simple. Now, if you're interested in a different type of index fund that isn't maybe the S&P 500, let's say it's more focused on cash flow and dividends, they also have options for that. They have a variety of different options, pretty much just dependent on what your goals are. So you can usually find an index fund for whatever you're looking for. This one here is a dividend appreciation index fund. Again, a minimum of $3,000, but it has a slightly higher expense ratio at 0.08%. Now, what are some other options and where can you buy these? Well, if you're looking to just kind of explore and see what's out there, Vanguard has a great selection, but you can also buy index funds from Fidelity, from Invesco, from Charles Schwab, and from a variety of different others. A quick Google search will show you all of the different options that are available in the country depending on where you live. Now, why do people buy ETFs? Why do people buy index funds? What's the big difference? Well, for the most part, you saw that index funds have a minimum. They're also not super liquid, so it's a little harder to buy and sell them, and you have a little bit less control compared to an ETF that you could buy and sell whenever you want. And so a lot of people with a lot of money put their money into index funds because it's a little bit more trustworthy and they feel more secure. But for retail investors and younger people, most people go with an ETF. Now, the reason that most people go with an ETF is because there's no minimum investment, so there's no $3,000 minimum. You usually just have to buy one share, which is usually under around $300. They also have lower management fees, and they can be bought and sold like a regular stock from a broker. So you can open up a Wealthsimple or a Robinhood or a Questrade account, and you can buy and sell ETFs during the day because they trade during regular market hours, which is very, very nice. And a lot of the times you can even make commission-free trades, which is really, really convenient. Now, how do you buy an ETF? Well, it's a little bit different. You're not going to be going through the Vanguards and the Charles Schwabs. You're going to be going through a broker. And I have links down below to Questrade, Wealthsimple, and Webull. Wealthsimple is good if you're trying to do things from your phone and you're just getting started. Questrade is better if you're doing any swing trading or day trading, or you're dealing with a lot of money, and Webull is the best if you're in the United States. Now, once you've chosen your broker, you then need to open an account, and what I would recommend is doing some research on tax-advantaged accounts. If you live in Canada, I would look at the TFSA and the RRSP, and if you live in the USA, I would look at a Roth IRA, or you could open a margin account or a cash account, but there are some major advantages to opening one of those tax advantaged accounts, especially over the long term. Now, once you have an account open and you're available and ready to buy and sell securities, what I would look at is VOO. This is the S&P 500 ETF. Costs $377 per share, and it only has a 0.03% expense ratio. So you can see it's even lower than the S&P 500 index fund. The other one that you may want to check out here is a BlackRock dividend ETF. This is the one I like. Ticker symbol HDV. It only costs $108.41 per share, but it does have a slightly higher expense ratio. It also pays a very nice dividend. So there's lots of different options out there. These are the main things that you want to consider though when you're choosing between an index fund and an ETF. Do you want to be able to trade it during the day? Do you meet the minimum requirements? And what are the management fees? Because sometimes you can get the exact same product in an ETF with a lower management fee, so you might as well just save the money. Now here's the summary to go through. Number one, index funds and ETFs are both great products, but ETFs are probably better for most people because they have no minimum and you can buy and sell them throughout the day, which is extremely convenient. Sometimes they even have lower fees, which is also great. Secondly, you need to make sure you decide on what your goals are, and then you need to build a plan to reach those goals. You shouldn't be buying an ETF or an index fund based on what somebody else is buying or what you see in this video or what you see some other YouTuber holding. You need to make sure that you are setting a goal and then you're building your own personalized plan to meet that goal. That is what I am trying to do here, is give you the tools to help you build that plan. Now, if you're interested in another tool, I have a completely free course on stock market fundamentals that will walk you through everything you need to know step by step, and it's broken down into individual videos. So if you're just looking for a little piece, or you want to learn about trading or technical analysis or reading a balance sheet, check it out. It's completely free. You get a 2-week free tour when you use the link in the description down below. There's only 10 hours of content. There's 13,000 students, over 400 reviews for you to take a read through. There's over 1.9 million minutes of watch time that is being spent on this course by students just like you. I promise it'll be the best free resource that you can find online. It is hosted on Skillshare, and there's a link in the description down below. Seriously, go check it out. I promise you it'll be worth your time. And thank you so much for watching to the end of this video. I'll see you in the next one. Good luck trading, good luck investing, and if you got any value out of this video, please remember to click that like and subscribe button. Thank you so much, and we'll talk to you soon.